Welcome to The Explainer. Today, we're completely stripping away all that noise, the wild rumors, and those overnight millionaire fantasies you always hear about in the crypto world. Instead, we are setting the stage to build the mindset of a real, successful trader. If you're tired of just chasing quick money and you actually want to understand the true foundations of the market, well, you are in exactly the right place.
It's a pretty harsh reality in the crypto space. Most people only chase quick money, and because of that, they end up losing it. So today, we're ditching the hype. We're going to focus entirely on structure, risk management, and the kind of discipline that actually protects your capital and helps you grow it over time.
Okay, let's dive into this. Here is the mentor's playbook we're following today. First, what is spot trading? Second, 3 ways to profit. Third, how traders lose money. Fourth, golden rules of risk. And finally, mindset and staying safe.
All right, part 1. What is spot trading? The simple truth about owning crypto.
Spot trading is actually incredibly straightforward. Seriously, no need to be intimidated here. It is simply buying crypto at the real, current market price. There's no complicated leverage and absolutely zero borrowing. Think of it literally like walking into a grocery store and buying a bunch of bananas. Once you pay for them, you own them outright. They are yours. It's really just simple buying and selling.
I absolutely love this analogy to sum it all up. I bought candy at 1 beer and sold it at 2 beer. Easy. That right there is the core mechanism of spot trading. You buy an asset, it becomes securely yours, and you simply wait to sell it for a higher price. It really grounds the whole concept in reality, doesn't it?
Moving right along to part 2, 3 ways to profit. This is your trading arsenal.
Now, what's really interesting about this breakdown is that final part about real ownership. We've got 3 main strategies here: buying low and selling high, the HODL strategy, and swing trading. Sure, they all have completely different time frames and risk levels, but notice that in every single method, you retain real ownership of the asset. Whether you're holding it for a few hours or a few years, that coin is sitting securely in your wallet.
Let's highlight the absolute magic of the hold method, which just means holding on to your assets long term. To put into perspective why this is so powerful, just look at Bitcoin. Back in 2018, Bitcoin was sitting at around $3,000. People who bought it and simply held on to it, kind of like locking gold in a box until it becomes super valuable, watched it reach a staggering $69,000 by 2021. I mean, that is the incredible potential of long-term patience.
Then, you've got swing trading. This one's a bit more active. You're watching the charts, you buy at a low point, a dip, and you sell when the price pumps a few days or weeks later. So for example, let's say Ethereum dips down to $1,800. You buy it. 1 week later, the price jumps up to $2,200 and you sell. Boom. That is a clean $400 profit per Ethereum just by being patient for a few days.
So that brings us to part 3, how traders lose money, the traps you absolutely need to avoid.
You might be wondering, how do people even manage to lose money in such a simple system? Well, the number 1 trap is buying when the price is already sky high, watching it start to fall, and then panic selling. Other people buy scam tokens or pure hype coins that have zero future, or they hold forever with no actual exit plan, or they just do absolutely zero research. But remember the golden rule of spot trading. Because you own the asset outright, you literally only lose money if you press that sell button when the price is lower than what you paid. And this brilliantly illustrates why understanding the type of trading you're doing is so crucial. Just look at the contrast. Spot trading is generally slow and safe. If you bought a solid project, time is your best friend. Futures trading, on the other hand, that is a high-risk, high-reward arena. You can make huge gains fast, but you can also lose your entire account in a matter of seconds. Futures require low leverage and incredibly strict stop losses. Spot trading is definitely your safer, foundational starting point.
Okay, part 4, golden rules of risk. This is all about protecting your capital.
Before you ever even think about clicking buy, you need to run through this mandatory checklist. Ask yourself these 4 questions. Where exactly will I enter? Where is my stop loss, meaning the exact price where I cut my losses? Where is my take profit? And finally, how much can I actually afford to lose on this specific trade? Listen, if you cannot answer all 4 of these questions clearly, you simply must not trade.
To confidently answer those entry and exit questions, you just need some basic chart tools. You've got support, which is basically where the price usually stops falling, and resistance, which is where it usually stops rising. Then you have candles, which display exactly how the price moved within a specific time window, and indicators, like the RSI, to help you with your timing. These aren't overly complicated at all. They're really just shapes and zones that help you plan out your trade.
So the crucial point is this. Risk management is literally everything. You should only risk 1 to 2% of your total account on any single trade. If you have a $50 account, you never ever risk the full 50. You start by risking just $5 to $10 per trade. The goal here isn't to win every single time. The goal is to protect your account so you survive long enough to keep trading tomorrow.
And please internalize this quote right here. More trades do not equal more profit. Trading all day long or cranking up your lot size just to win faster, that is literally just gambling. Real traders know that finding one clean, well-planned setup per day or even just per week is truly enough to grow your portfolio.
Finally, Part 5, Mindset and Staying Safe. Thinking like a pro.
Let's move to and see how this builds into the exact routine real traders use to grow fast, keeping a trading journal. Step 1, write down exactly why you took the trade. Step 2, log your entry, stop loss, and take profit. Step 3, be brutally honest. Did you actually follow your plan? Step 4, record the win or loss. And Step 5, write down what you learned. This kind of tracking is exactly how you evolve.
A huge part of that pro mindset is knowing when not to trade. Pay close attention to these red flags. If you're feeling angry, greedy, or rushed, step away. If you don't fully understand the setup, or if you're trying to revenge trade to chase recent losses, do not trade. Also, avoid trading highly volatile news events like Fed rate decisions or sudden Elon Musk tweets unless you are highly experienced. The market will jump around like crazy. Just rest up and come back fresh.
Now I need to issue a very stern, direct warning here to keep you safe. Trust absolutely no one with your wallet. Never let anyone online trade for you. Never, ever give out your private key or seed phrase to anyone, and be highly suspicious of those Telegram groups promising easy signals and quick profits. In crypto, if it seems too good to be true, it's a scam, period.
I really want to validate the journey you are on today. As the source material reminds us, you're building the mindset of a real trader. Most people only chase quick money. You're learning structure, risk, planning, and discipline. That's what brings long-term freedom. You know, you are already miles ahead of the pack just by focusing on these fundamentals, rather than giving in to the hype.
So as we wrap up this explainer, I'll leave you with this question to chew on. What do you want to master next on your journey? Is it beginner chart reading to really nail those entries? Finding the best fundamental coins to hodl long-term? Or perhaps setting up your own Notion dashboard to track your trades? The foundation is officially set. Now it's time to build. Keep learning, stay disciplined, and always protect your capital.